On behalf of Sunidhi Securities, I extend a very warm welcome to all of you on Q4 FY18 and full year FY18 post-result concall of Heritage Foods Limited. Management side is being represented by Dr. Sambasiv Rao, President, Mr. A. Prabhakar Naidu, Chief Financial Officer, Mr. Samba Murthy, Dairy Division Head, and Mr. Umakant Barik, the Company Secretary. The presentation will start with Dr. Rao briefing us about the performance, and then we can follow up with the question and answer session. Without taking much time, now I hand over the call to Dr. Rao for further proceedings. Over to you, Dr. Rao.
Thank you, Mr. Elish. I welcome all the participants to this earnings call today. I'll initially present the standalone financials of Heritage Foods, which include two verticals, dairy business and renewable energy. Subsequently, I'll take you through the consolidated presentation, which includes, besides these two divisions like dairy and renewable energy, there's one wholly owned subsidiary, Heritage Nutrivet Limited, which handles cattle feed, and Heritage Farmers Welfare Trust, which conducts welfare activities for the farmers. Now, I start with the Q4 standalone performance, that is dairy and renewable energy. In this quarter, we have achieved a turnover of 555 crores with a growth of 16% against the previous year same quarter revenue of 477 crores. In Q4, our EBITDA number stands at 47 crores against 33 crores of the same quarter previous year, registered 41% growth. At PBT level, it is 31.8 crores during the current year's fourth quarter. Previous year had certain exceptional items related to the discontinuing operations, etc. So it's not a very comparable number. Dairy alone, if you take PBT level, in the current quarter it is 32 crores. Previous year same quarter it is 23 crores. There is a growth of 36%. This quarter patch level it is 20.5 crores. Now I move on to full financial year 2018 at standalone level. The company registered a turnover of 2,344 crores. This is 27.8%. They say 28% growth against the previous financial year's turnover of 1,834 crores. At EBITDA level, there is a degrowth of 10%. Current year it is 133 crores against previous year it was 149 crores. PBT level for the full year it is 88 crores this year versus last year's 323, which is not comparable. It has other numbers of one time and
208 crores.
208 crores. It includes the previous year's one-time extraordinary item. At PAT level, current year it is 60 crores versus last year's 84 crores. It includes plus other extraordinary items. Total was 292 crores last year. Now I move on to consolidated results of Q4. Total turnover for this quarter is 562 crores versus last year Q4 494 crores. It registered a growth of 14%. As I earlier mentioned, this number includes dairy, renewable energy, subsidiary called Heritage Nutri Vet Limited, and a trust called Heritage Farmers Welfare Trust. At EBITDA level for the Q4 consolidated level, it is 47 crores versus 37 crores last year for Q4. At PBT level, it is 31.7 crores. At PAT level, it is 20 crores. I am not taking previous year's consolidated numbers. They have exceptional items and one time. And full financial year consolidated number is 2,373 crores. It is 25% growth over the previous year's 1,895 crores. Consolidated level EBITDA for full year 136 versus 149 of the previous year. And PBT level 79.79 versus 89.8 versus 323 including exceptional item. PAT level 62.68. Some details of dairy business operations. Procurement volume increased from 10,63,000 liters per day to 13,24,000 liters per day. It's about 25% growth in the milk procured during the financial year, Q4. Sales volumes of milk, it has grown by 19% from 8.75 lakh liters per day to 10.42 lakh liters per day. Contribution of value-added products in Q4 has gone to 23% versus 22% previous year, same quarter. The value-added products growth is 17.5% in this quarter over the previous quarter. It stands at 127 crore revenue versus 108 crores. During the current year, CapEx incurred for the full financial year is 163 crores in the dairy and 16 crores in the renewable energy. Significant capacities have been added particularly during the last quarter, aimed at achieving the current year's and future years of growth. Working capital cycle is 14 days versus 13 days of the previous financial year. The debt at the current year March, long-term loan is 160 crores and working capital 102. Total debt 262 crores. And our subsidiary, which is handling cattle feed, that is Heritage Nutri Vet Limited, registered a revenue of 67 crores for the full financial year with an EBITDA of 1.32 crores for the full year and PBT of negative 36 lakhs for the full year. For the Q4, the revenue of Heritage Nutri Vet Limited is 16 crores with an EBITDA of 1.28 crore and PBT of 76 lakhs for this last quarter. There is no comparable quarter for this business as this came into action only 2017-18 and few months ahead of this were there in the previous year. These are broadly the numbers of the Q4 and full financial year 2017-18. I now leave the subject for interaction. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question at this time, please press star 1 on your phone. We have the first question from the line of Resha Haria from Green Edge Wealth Services. Please go ahead.
Yeah, good evening, sir. I had a couple of questions. The first one being that, if like the last time, if you could give, a state-wise granular progress in terms of our plants, etc. So you had mentioned that in Haryana and Punjab, the plants will be ready by April 2018. So if you could comment if, those plants have started operations and are they contributing to revenues there? And also in Tamil Nadu, last year sales got impacted because of some adverse comment by some minister there. So is the both there back in track?
Thank you. State-wise numbers, as I explained last time, we have not presented in the public domain because of certain disadvantages we are noticing from the competition action. So we will share when we meet separately.
Right. So just that, if you could comment that, have our plants started in Haryana and Punjab?
Yes. It started in the current quarter, that is first quarter of this year. Not in the last.
Okay. And so the sales will flow in FY19, right?
Sales were already there in the last year also, last quarter, last year, because that sale was essentially from Dairy Life brand acquired from Reliance business. We were operating from a third-party plant in Punjab for that business. This business moved into the own plant which we acquired from Waman Foods near Chandigarh. The operations have been commenced in this quarter of 18-19. The details will come in the subsequent quarters.
Right. And sir, about Tamil Nadu, have the sales recovered there?
Not significantly. We have been making some effort. In this quarter, we have just started some marketing campaign to give boost for the sales in the market. We do expect from the June certain traction in the market in Tamil Nadu.
So you see that the pain in the sales in Tamil Nadu market was essentially because of that adverse comment by the minister, or is it because of some kind of competitive pressure or, some other such reason?
Yeah, it's combination of several factors, including competition, including pricing, including the market perception.
Right. And sir, have you started selling value-added products like curd, etc. in the North India or in the Western region?
Yes, North India we started with curd and curd buttermilk right now in the last few months. We have created infrastructure for these products, and other products like paneer, ghee will follow in this quarter. All the infrastructure is in place and the products have started hitting the market.
Okay, and Maharashtra is still essentially a liquid milk market?
Maharashtra is yet to start. We just started the curd and the flavored milk through a co-packing arrangement. We are doing in Prabhat Dairy curd and flavored milk in Mother Dairy and Qtr4 Foods in Pune. The co-packing arrangement started. Till we establish our own infrastructure, we'll continue here, and we are also looking at creating own infrastructure for production facilities in Maharashtra during the current financial year.
Okay. And sir, in FY19, do we see a 20% kind of a top-line growth run rate continuing? Because, Q1 onwards, even the Reliance Dairy numbers will come in our base. So it will be like a high base effect. So do we expect to continue the 20% plus kind of a top-line growth run rate?
Yeah, that is our ambition. We will work towards that.
Right. And also if you could...
Sorry to interrupt, ma'am. May I request you to please return to the queue for any follow-ups?
Sure, I'll come back.
Thank you. The next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Hi. Thank you for the opportunity, sir. So firstly, in terms of the gross margin numbers, haven't really seen too much of a increase in your procurement prices, it's in fact come down. But again, a sharp improvement in our gross margins. If you could just highlight the reasons for the same, and any impact also coming in from the Reliance Dairy acquisition over here.
Could you repeat, please? Could you repeat?
I'm asking the gross margin side. If you could just highlight what are the reasons for the gross margin improvement? Because if you look at the milk procurement prices, haven't really fallen sharply. I mean, it's just been about a couple of percentages down. So just wanted to understand the reasons for gross margin improvement.
Yeah, Mr. Prabhakar will take you through the gross margin improvement from quarter 3 to quarter 4 of the...
Quarter 3 gross margin is 19.63% and quarter 4 21.83%. One of the reasons is actually the zone 4, which is mainly related to Reliance business acquisition. The losses have come down. So in quarter 4, actually the losses is almost, PBT losses is 83 lakhs only. Previous quarter around 5.2 crores. So that is one of the reasons. And the other raw material cost, the right mix of fat products are the better prices and all. That is the reason actually the gross margin has slightly improved.
Okay, so you said the fat losses were less, you said. Did I hear that right?
Fat losses are actually around 3.6 crores this quarter.
Almost same.
Yeah, almost same. Yeah. So the procurement prices, because we are operating in the different markets, so raw material, both milk and as well as SMP consumption, both together as compared to the last year, it is around 8 crores. There is a gain in that, reduction in cost of raw material. So the main reason is actually Reliance losses have come down. That is one of the reasons. Immediately from previous quarter to the current quarter, gross margin improvement is because of that.
Okay. And are we safe to say that obviously these losses now, obviously the losses are definitely gone for good, and we're definitely looking at a profitable number going forward as well? And any target you have in your mind as far as Reliance business is concerned in terms of what could be the EBITDA margins over there? Because just by seeing an improvement into a loss figure, we've seen our EBITDA improve to almost about 8%. So what are the kind of margins that we're looking at, let's say, for the Reliance business incrementally?
Yeah, we will work out and let you know in course of time, because this is not very concrete. It keeps changing from quarter to quarter depending on the milk prices. We won't be able to articulate exactly what is that percentage for that segment.
Okay. But can we at least assume one thing, that the losses in Reliance is definitely gone for good? Would that be a right assessment, sir?
That is what I'm saying. It is too early to say, because it depends on the prices movement. Okay. Certain months prices may go up for milk prices. In a particular quarter, we might end up in marginal loss. In particular quarter, we might make profit. End of the year, positively, we will achieve positive numbers by end of the year. But month on month and quarter to quarter, there will be some fluctuations. Still we achieve threshold volumes. We have to go through, and the mix of value-added products have to increase. Just now the facilities are set up. So we have to get into market and promote our value-added products. There will be certain promotions, schemes, etc., placement costs. So we have to go through one financial year with adequate volume of value-added products in the market, and then plan for the next year. This year is a kind of journey we have to walk through and see. Once we have come out of the bigger problem, now we will stabilize onto the volumes.
Just a couple of bookkeeping questions over here. In terms of our curd sales, if you could just tell us what that number was in terms of, what is the curd sales number?
Sorry? Curd sale?
The curd sale revenues. The curd revenues for the quarter.
Revenue on sale of curd during the quarter.
Yeah. We used to give that number in the past. I just didn't see that number.
Yes.
Volume only. for Q4, curd sale is 249 metric tons per day.
Okay. In terms of value, sir?
Value is 100 crores.
100 crores.
100.444.
Okay. Okay, sure. And sir, if you just a question over here on the value-added products. If you look at for the full year, I think we have done about 22% would be the value-added share as far as
23%.
Yeah, about 23%. It's slightly lower than our FY17 number. I understand we have the Reliance Dairy and all those things, but just wanted to understand incrementally what are the kind of value-added sales we are expecting going forward, given that you're looking at distribution expansion into a lot of other markets as well. So any target which you have for FY19-20 in terms of what could that number be?
Year on year, we are gearing up to add 3% increase on the base.
Okay. Okay. We'll add 3% on the base. Sure. Thank you very much, sir. I shall come back on the queue.
Thank you.
The next question is on the line of B.V. Bajaj from Bajaj Shares and Securities. Please go ahead.
Yeah. Thanks for taking my call, sir. Good afternoon. Sir, I want to draw your kind attention on the point that e-commerce business or sports food, whatever we call, because as you just now stated, value-added products, range of value-added products we are increasing. But if you see the market of e-commerce, our market share is very, very negligible compared to other, and they have got a range of products to supply hospitality, fast food chain and all, whereas we are yet to gear up. Can you throw some light on that, any action?
You are right, we are yet to gear up.
You're right, because there was a visit at the Gokul plant also, it was discussed. So our share in that, because if you go through other e-commerce business, there is a lot of margin in that compared to regular traditional products. That is one thing, sir. So please look into that. Second thing is,
sure,
our
thank you.
JV, sir, our JV with Noan Dai Food Private Limited, how far it has progressed and what is that action plan on that? Can you throw some light on that?
Yeah, sure. This joint venture, civil work, construction and equipment acquisition, etc. is being done. So we are expecting to complete the construction and commissioning in the last quarter of this year, somewhere in February, March, and look for the commercial launch in the month of March 2019.
So, and last question, sir, that our profit margin, though gross revenue has gone up by 30%, profit margin has come down. Will it be, can you throw some guideline on the 18-19 financial year, sir?
And how do you say margin has come down? At the full year?
Full year, sir. Consolidated full year. It was 350.
Yes, you're right. Because last year we have acquired the Dairy Life brand.
Yes. Yes.
It has caused initially certain operational losses.
Sure.
Also in the H1 we had higher milk prices, so that also impacted the margins.
Sure.
Q4 has recovered the margins, it is very clear from the data. And this year we anticipate better margins over the last year.
And our non-current liabilities because of acquisitions, sir, it has gone up by 400%.
No, that is upside sharing part of the future retail shares.
Thank you, sir. Thank you.
Thank you. Next question is on the line of Rohit Ramesh from Panthamat Fund Managers. Please go ahead.
Comments on this. Hello?
Yes, sir, please go ahead.
I just wanted your comments on the UHT milk sector. How is it? And
I'm
how
sorry, your voice is breaking.
Can you hear me now?
Yeah.
Hello?
Not very clear. Who's speaking?
This is only from Panthamat. Can you hear me?
Sir, if the voice is breaking, may I request you to please dial in from a different number?
Yeah, sure.
Thank you. The next question is from the line of Anirudh Joshi from ICICI Securities. Please go ahead.
Hello, sir. Sir, if I exclude the revenue run rate of Reliance Dairy of somewhere around 45 odd crores from this quarter's numbers, so then on a YOY basis, we get a organic revenue growth of just 7%. So I understand that there was probably limited benefit of price hikes because we haven't raised prices of our products in last 1 year. But still 7% is a significantly lower number. So why probably the revenue growth would have come in at 7%? That is one thing. And also, can you please elaborate on the Tamil Nadu issue, what happened? And how big is Tamil Nadu as a market for us? And when do we see going back to the original sales in first half of FY19, second half of FY19?
Just a moment, Mr. Anirudh.
Yeah, sure, sir.
Yes, Anirudh, we will... we have just launched our marketing campaign in Tamil Nadu, including a TV ad, newspaper ads, then the point of sale materials, and started activating our teams as well as the distribution channels, expanding our network, retail network, etc. after the last year's setback. And we do anticipate after the summer vacation, from sometime in the first week of June, once the vacation situation is out, some traction in the sales. Recently, a couple of new brands have also been launched in Tamil Nadu. One is Srinivasa and another is Vallabha. These two brands also started giving deep discounts and high channel margins as an introductory strategy for like a predatory pricing model. So we are withstanding that pricing strategy of the new entrants and also started our own campaign. So we do expect improvement in the situation, whether it is 15%, 20% volumetric growth. We will see how it moves on and step up our efforts. If some inputs have to be given by us also, we will try to do that.
But sir, exactly what was the issue means? And also the first question, we have a 7% organic revenue growth. So that's quite low compared to previous 3 to 4 quarters.
Yeah, on that we have not disposed our inventory since Q4 because of the low prices. Anticipating higher prices for the fat, we are holding our inventory. That's why even our working capital cycle has gone up. Our inventories have gone up. We are looking forward for better realizations to sell, particularly the butter and ghee products in this quarter. So we have depressed our growth in that way.
Okay, so we have large inventory which we have decided not to sell in March, and probably that sale may get booked in June quarter.
That's it.
Okay. And in terms of last question, we have still maintained the guidance of 6,000 crore revenues by FY22. So if I look at FY18 sales to FY22 sales, we need to grow in excess of 26% in terms of revenue CAGR basis. So do you see 26% kind of CAGR is achievable considering over probably 1 or 2 years, if the milk prices remain lower, we may not take aggressive price hikes. So entirely, to a large extent, that 26% revenue growth will have to be, it needs to be mainly volume growth. So any your views on the same?
See, this is again, there are 2-3 dimensions for this 6,000 crore discussion. One is a framework is created within the company to to achieve this aspirational number. This is our ambition of our company to achieve those numbers. The ambition has been articulated through an exercise of vision and mission conducted with an external consulting agency, KPMG, by involving all stakeholders, particularly in the employee segment from top to bottom, directors to field workers in different methods. All of us are aligned for this kind of growth and achieving these numbers. Only when a framework of this nature is available, our resource allocation happens. We look out for expansions in the milk sheds for adding more infrastructure for milk procurement, engaging more farmers. Today we have X number of farmers. We have to double the number of farmers, engagement, bring them into our procurement network. Similarly, we have to create distribution mechanism, dealers, parlors, expand into modern retail or e-commerce, etc. When we have these numbers in mind, then all the teams will work for the numbers and allocate their time resources. Organizational structure also is being revamped to ensure this kind of growth. We are more an open organization with more territorial jurisdictions and empowerment of different functional heads. Then technologically, we have also integrated all operations end-to-end with SAP. We have moved out of basic SAP and now we have gone into next level of SAP called SAP HANA, which is a more integrated ERP for achieving the integration on a daily basis. So the organization geared itself up for this kind of growth. Whether this growth comes within the next 4 years or it will take 5 years is a function of several other factors apart from the organization's readiness, ambition, also the kind of ecosystem we are working. This growth is contingent upon many factors like weather, a good monsoon year, a drought year, national policies, state policies of intervention in the dairy market for the prices, then the competition building up from the domestic players and international players. All these factors do help us and impact us either positively, negatively. Having said all this, we are still geared up and we are ambitious and we are working to achieve 6,000 crores by 2022 with a caution that it might slip by a year or two. Hope I have explained our position clearly.
Okay, sir. Yeah, thank you.
Thank you. Next question is from the line of Rohit Ramesh from Panthomat Fund Managers. Please go ahead.
Hi, so I just wanted to know how big is the UHT milk market right now and how fast do you expect it to grow going forward?
UHT is not a very significant share in the market. Maybe at a national level it is estimated to be anywhere under 5%. And the growth is also not significant because as a country we are fond of fresh milk. Freshness is an obsession in the dairy. And every customer, particularly in South where we do home delivery almost significant volume, either it is a half liter, 1 liter, every day morning we have to deliver at the doorsteps fresh milk. So people got used to this fresh milk concept. Not many prefer the long shelf life milk which is there for 3 months, 4 months in the shelf. So the growth of UHT is not happening significantly. However, there are certain pockets where UHT milk is preferred, like where the power supply is not continuous, where the milk availability locally is not good, like not available like northeastern states or Himalayan states where milk availability is low and the distances are long, power supplies are not adequate. Those areas prefer the long shelf life milk. Similarly, deficit pockets in the country where fresh milk is not readily available, those pockets also do that. And the businesses like tea stalls and coffee stalls and the railway stations, airports, etc., where they are not sure of the demand for using fresh milk. There is a mix of fresh milk and long shelf life milk like UHT. So they can store and use it as per the demand, whereas fresh milk cannot be stored beyond a point. So these are the select pockets of UHT consumption. So we don't see a huge traction or growth in the UHT milk like fresh milk.
So basically like in the northern parts where it maybe logistics is an issue, those type of places, mostly UHT milk will be a little more famous.
And the defense forces where they can't get fresh milk every day. Army canteens, Navy canteens, all these are very specialized users. And very few people believe this is the most superior and safe milk, and they also prefer this compared to the fresh milk. Some of them have a feeling that these Tetra Pak packs are much safer than a normal milk. They are priced quite high, about 25% higher than a fresh normal milk.
And how is the competitive intensity in Punjab? Like, there are strong brands such as Metro Milk and, are there any bigger brands in Punjab?
Yes, it's quite a competitive market. Their cooperative milk itself is strong. Verka brand, then Amul has entered a few years back this market. The competition is high, but milk is also, availability is high and consumption of milk is very high in these areas. So we can also try to join the suppliers group.
Okay. Thanks a lot, sir.
Thank you.
Thank you. Next question is from the line of Resha Haria from GreenEdge Wealth Services. Please go ahead.
Yeah, thanks for the follow-up opportunity. If you could elaborate on your ice cream strategy. So we've just launched Alpenly brand. So if you could elaborate on the strategy in terms of, maybe having a mass brand and a premium brand and, what is the distribution model. So initially we'll be launching in the south markets and probably when do we plan to launch in the north and the western regions?
Sure. We already have ice cream. We already have ice cream for last 7 years in the name of Heritage brand. Over a period of time, this has been converted into a frozen dessert brand, and we wanted to have an exclusive brand for ice creams. This is introduced as Alpenly. If you are aware of the campaign that happened a year back between two brands, one ice cream milk-based, another frozen dessert vegetable fat-based, there was a disturbance in the market between the two ice creams and frozen desserts. There was a space we identified in the milk fat-based product, that is ice cream, versus vegetable fat-based frozen dessert. We wanted to have a kind of superior product in the name of within the Heritage brand. So Heritage is now branding frozen dessert as Heritage and ice cream in Alpenly. We are keeping both the products in the same freezer of Heritage. Wherever Heritage ice cream is there, Alpenly is also put in the same freezer. Freezers are branded, outlets are branded as Alpenly, which is the driver of the business growth, that is a milk fat-based ice cream. And we will be keeping in all the markets wherever our earlier Heritage frozen dessert is there. Alpenly ice cream is also there. And it is comparable with any other premium brands in ice cream segment, both in terms of quality, specifications, packaging, and pricing.
So would this Alpenly brand be available in, let's say, Maharashtra, Punjab, Haryana, Delhi markets?
Right now, we don't have in all those states except Mumbai and Maharashtra. Mumbai, wherever we have possibility, we have started, I think, around 200 points of sale. We have kept our freezers called Alpenly, where we sell both Heritage and Alpenly in those freezers. We are trying to expand within Mumbai instead of going to outside the places in Maharashtra.
Right. And
I'm sorry,
it's available in...
I would request you to return to the queue.
Yeah. What kind of revenue target are we looking at from the ice cream business, like over the next 2-3 years?
I mean, it's a starting of this brand. We have not yet, presented the full scheme of ice creams. We'll give you in the course of year during the next call sometime.
All right. Thank you.
Thank you. Next question is from the line of Rupen Masalia from RN Associates. Please go ahead.
Yeah, good evening, sir, and congrats for a good set of numbers. Yeah, I have a couple of questions. One is, Vision 2022, you are planning to achieve 6,000 crore revenue. So how much growth you are expecting organically, and what sort of capex you are planning to incur, and inorganic initiatives? That's number one.
Yes, our 6,000 crore target, we basically anticipate to come from organic growth only. Inorganic growth is based on certain opportunities available, though there is no targeted number given for inorganic growth. It depends on the availability of a brand acceptable to us, which can match in our quality standards, and also the reasonableness of the valuations that are expected. So therefore, inorganic has no target. It is opportunity, suitability, and acceptability of the valuation to both parties. So as we come across any opportunity, we will evaluate and take a call and keep notifying the growth. There is no set targets for that. Coming to organic, the capex at the moment, the run rate is going to be 110, 120 crores a year kind of investments in the next 4 years, which are anticipated to yield this kind of revenue growth. Our earlier decade capex was maybe half of this, and this period we are doubling our capex investments, particularly the new markets where we don't have capacities. We have to create capacities and deliver these growth numbers.
And sir, coming to, segmental breakup, like out of 6,000 crore, a major proportion would be obviously from dairy, but apart from dairy, VETCA, veterinary care business, renewable energy business. So what sort of mix you are seeing?
It is essentially driven by dairy growth only. Renewable energy is not a separate revenue. If you have also noticed in the current year or last year, it is shown as an intercompany revenue. There is no additional top-line advantage because of this. Entire renewable energy generated is aimed at captive consumption. The revenue generated gets netted off when you take company revenue, because it's an interdivision or inter-segment, intercompany or inter-segment. So I don't see any revenue benefit coming from the renewable energy, except we have certain tariff arbitrage advantage, because the power supplied by the public sector power companies is always higher than the power cost of our own generation. So we have the price advantage. Our cost of production will come down. Similarly, there are certain tax breaks available because of those investments. So that will not help in revenue. Next is veterinary care or the cattle feed. This is also 50% of the revenue is generated from the intercompany sale. Half of the feed generated product produced packed is going to our own farmers, which is sold through the heritage foods. So only half of the revenue is coming from the general trade, other farmers where direct sale happens from the subsidiary company. So that is also not going to be significant. On an average, per annum, we are looking at 100 crores, 200 crores kind of revenue coming from this company, subsidiary company, from the general trade sales. And another 200 crores come from the heritage farmers. So at the end of 5 years, by 2022, maybe 200-300 crores will be the revenue generated by subsidiary from the general trade, another 200-300 crores from the internal sales, which will be netted off.
Okay, sir. And last housekeeping question, like Reliance Dairy's number for FY18, I want only 3 numbers, revenue, EBITDA, and PBT.
Yeah, according to me, we have forgotten it is Reliance Dairy. We have considered this as Heritage Dairy.
Okay.
I don't want to talk any more Reliance Dairy in my discussions. They also won't like Heritage using their name.
Okay, fair enough.
We are merging all operations. Merger is complete. Consolidation is complete. So therefore, the tracking also is difficult for us. what is milk coming from Reliance Chilling Center, acquired from Reliance, what is coming from this and all that. Now operations are integrated. From this quarter, we will not discuss separately. We will be presenting it as a heritage only.
Okay.
Thank you.
Okay, thank you, sir.
Thank you. Next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity again. Just one thing on the value-added side, sir. So, apart from curd, what are the next, let's say, couple of drivers that we're looking at, which would probably be sizable for us? Because we're looking at 2-3 initiatives at one time. We're probably talking about ice creams. We're also talking about UHT milk, and even Novalgine is coming. So, if you could just give us some sense in terms of, let's say, from a 2022 perspective, what other could be the large contributors to the value-added products?
Sure. There are flavored milk, buttermilk, ice cream, lassi. These are the products which will pull up, let us say, 15% of the revenue from the value-added products, while the curd will give 65-70% of the revenue going forward. And the yogurt will come in a separate subsidiary, so it will be reflected differently. That could also be another 5% of the revenue.
Okay, so you said about 15% is flavored milk, ice cream, lassi, and buttermilk. Curd is about 65%. That makes it about 80%.
Curd is 70. Curd is 70, and these are about 15-20.
Okay, got it. No,
90, and then there will be many other smaller products like whiteners, SMP.
Okay, got it. This you talk targeting about 2022, right? That's the number you're looking at.
Yes.
Okay, sure. Thank you very much.
Thank you, Prashant.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. Thank you. Next question is from the line of Nitin Gosar from Investors Mutual Fund. Please go ahead.
Hi, sir. I wanted to check the acquired asset. What are changes we have brought in till date, and what are more left on the table, and that will happen over a period of time?
Which one you are talking, please?
The Reliance part that we have acquired. What are changes we have brought in till date, and what are more steps which are left and that we can take in the upcoming years?
With an assurance that we will not discuss Reliance separately from next quarter, I'll reiterate what all we have done. This has been done in the last 3 quarters we have been explaining. We termed it as rationalization of the operations to bring more synergies and improve the margins. One, wherever the long-distance chilling centers are there, we have either shifted or merged or closed. We have inherited close to 35 locations where milk procurement operations were happening. Out of that, we have either merged or shifted or closed around 15. Okay. Close to 20 remain with us, and some of them also get tweaked in this course of time. So the long distance. Then second is in terms of sales, certain markets where Reliance started the dairy to support Reliance Fresh, the supermarket chain. We don't see those requirements in those markets. So those markets like Gwalior, Agra, Nagpur, Aurangabad, several places like that, we have withdrawn our marketing operations there because volumes are quite slow and the obligation of supplying to those stores is not there. They have now found alternate brands to sell there. So wherever viability is not there, those markets also we have withdrawn. On the operations, they were doing milk processing, packing in third-party packing stations by paying some user charges. Some places minimum guaranteed volumes are there, some places it is not there, but all operations were conducted in the third-party and an asset-light model. We have started shifting those volumes wherever possible to our own plants like Hyderabad or Pune or Chennai, Bangalore. Wherever we have plants, we have shifted those operations into our plants and got out of the third-party operations. In certain places where we don't have facility, we found an alternate. Like in Haryana, we have expanded our own plant, doubled the capacity so that this milk can be shifted there. In Punjab, we have acquired a kind of a physical asset. The company which was doing job work for Amul, they have sold their unit to us. So we have started operations in this quarter in that plant. In Rajasthan, we are yet to figure out an option. We are continuing in the third-party packing station. So our ambition is to move out of those third-party packing stations and get into our own for several reasons, several benefits we foresee in own operations. So distribution network, wherever possible, we have merged the routes. So the same vehicle carries both the brands in those routes, so optimizing the cost of distribution of milk and milk products. The next, coming to the value-added products, the Reliance business was mostly driven by the milk plus bulk sale of ghee, whitener, butter. So we have come out of the bulk sale of whitener and milk powder and butter. The operations to that extent have been pruned. No bulk sales are being conducted by us. We are only doing retail sales, preferably B2C, small quantities of B2B. So we have moved out of the B2B business in those commodities. So to that extent, milk procurement also has been slashed because the bulk business is not our forte and our business is more to B2C. So that's on the bulk trading part of it.
Got it, sir. Very elaborative. So one last question. On the gross margin part, I think the earlier participant also tried checking on this. Can we have some bit of more understanding on, gross margin expansion quarter on quarter? What could be coming in from raw material advantage and what could be coming in from pricing advantage? I understand sales mix is something which is continuous and it will be very difficult to, pinpointedly number it out. But raw material and pricing, something that you can help on?
In this financial year 18, the quarter 3 to quarter 4, there was an expansion by 300 basis points. All this has come from the milk procurement price drop. There was some improvement in terms of increased share of value-added products compared to the quarter 3. Quarter 4 has certain increase in the value-added product sale, but that has been nullified because of the marketing campaigns we have conducted during this period. So that is not reflected in the increase in the margins. So that's the change. And the first half year, there was a significant impact due to 3 factors. One was the higher raw material prices like milk and milk powder. Second is the acquired business contributed certain losses. And third was Silver Jubilee celebrations and brand rejuvenation and artwork change, etc. We have done significant marketing program in this year on the eve of Silver Jubilee, completion of 25 years of the company's commencement. So that has impacted in the first half. And during the coming months or coming quarters, the procurement raw material price advantage continues as we were reading the industry estimates, the procurement prices may not change much except in the buffalo milk tracts where the lean season has set in. But to that extent, that would get nullified with the increased sale of value-added products. So we may expect some amount of stability in margins in the coming quarters.
Perfect, sir. Thank you and all the best.
Thank you very much.
The next question is from the line of Kunal Pavaskar from Ingrowth Capital. Please go ahead.
Hi, my question was specifically about Karnataka. So without giving a sales breakup, if you can just explain a bit about the scenario there, especially with respect to KMCF, the kind of pricing they were doing. Are things back to normal or by when do you expect them to be? KMCF, the actions that the cooperatives were taking. So when do you see normalcy getting restored?
See, KMF has, I don't know whether you have heard me earlier, having an advantage of that 5 rupees support coming from Karnataka government.
Yes.
Are you familiar with this? Did you hear this? Yes. See, Karnataka government gives 5 rupees support price to farmers, those who choose to supply milk to KMF. And if the farmer supplies milk to any private company, that 5 rupees is denied. Therefore, most of the private companies, including us, have pruned our operations of procurement in Karnataka. Hardly we get any milk of Karnataka farmers unless they have some difficulty to give it to KMF. They won't give it to others unless we won't be able to match 5 rupees. The margin itself doesn't exist there. So what we have been doing is we are diverting our milk procured in the neighboring districts of Karnataka from Tamil Nadu and Andhra, conducting our sales operations in Bangalore.
Right, so you mentioned this, but are you seeing anything about that situation reversing? Because that would help reduce some costs.
It will only further get aggravated as politics keep changing.
Okay. That's all from my end. Thank you.
Thank you.
Thank you. Next question is from the line of Vikrant Kashyap from Qtr4 Securities. Please go ahead.
Good evening and congrats on a good quarter. Sir, you mentioned next 4 years you are going to do a capex of 100 crore, 110 crore per year. Can you please give us a breakup how it's going to be funded from your internal accruals and debt?
Yes, our preference is to go through internal accruals and debt combination like we have been doing for a long time in the same model. But there is also a possibility of, there is an opportunity or option for the company to monetize the share value in the FRL. So we have a lock-in period of 3 years. More than 1 year is over now. There is a potential capital available in the form of shares in FRL that can also be exercised in course of the journey, subject to, of course, decision by the board of directors and etc. But I won't be able to say at the moment because we have lock-in period and we need the director's approval on this. But as of now, our direction is debt and internal accruals are good enough to meet this demand of capital.
Okay, so for next 2 years, you need to raise some debt like we did in FY18.
Yes, it will continue.
Okay, and one question on your subsidiary, NutriVet. So what are your plans to, how big this company can be by 2022, as you have set up a target for 2022, and how much money you are likely to put in to make it a big company?
Yes. As I briefly touched in the earlier discussion on the contribution of different businesses for this target of 6,000 crores, the Heritage NutriVet business expected to touch around 400 crores in the next 4 years business. By end of 2022, it can reach to 400 crores, out of which half of it will be sale to internal farmers, half of it will be to the external farmers through a general trade channel. And the investments for this company basically are required to set up the production plant. So we have set up one plant already a year and a half back. That plant costed us close to 20 crores for investment. It produces 6,000 tons of cattle feed per month. We look forward to have a similar capacities, one plant a year. So if I take 4 years, 4 plants, it will require about 80 crores of capital for this business itself. And it has become profitable in the last quarter. By end of the first year, it has become profitable. I don't see any challenge for making each plant profitable within 1 year of its commencement. You should take plant as a unit and we don't need to fund any losses kind of thing. Big time losses for this business to grow.
Okay, right. Thank you very much and wish you best of luck.
Thank you very much.
Thank you. Next question is on the line of Shanti from Edelweiss. Please go ahead.
Good evening, sir. Shata here. Congrats on a good set of numbers.
Thank you. Thank you, Shata.
Yes, sir. So 2 questions from my side. One is wanted to understand, you set this target of 6,000 crores and you said this should be majorly from organic growth. So that potentially means from the existing states for milk particularly, we will continue at the similar states and increase the procurement within the current state. So we are talking about growing almost 15-20% in milk from the existing states itself.
Yeah, the small change in your first understanding. I didn't say entire thing will come from organic. while I was saying there was no target for inorganic. We didn't fix any target. So much has to come from inorganic. If there is an opportunity, we would certainly evaluate and take it forward and help. It will help us gearing up faster and definitely reach the target in time if inorganic is there. If inorganic opportunity doesn't exist, because we have certain preconditions for that, it cannot be an inferior brand in terms of quality practices and quality standards, and valuations of expectations shall match, and it should also not cannibalize our existing markets or existing brands. So therefore, inorganic may happen, may not happen. Therefore, we plan to do organic way. If something comes inorganically, we will definitely take it forward if it suits. And organic growth, now we have expanded our operations to 15 states. In these 15 states, we can definitely achieve the volume of 29 lakh liters in the next 4 years. So we don't need to go beyond these 15 states. These are quite milk-rich states in terms of production, and also consumption is very high in these states, these markets. So I don't see a need to go beyond these 15 states unless some acquisition opportunity comes in the state which is not part of this 15. Currently, our presence is there.
Great, sir. That was helpful. And secondly, sir, just one more question on the competitive intensity. Just wanted to, particularly since curd has we have become quite scalable in curd, and also on the milk side, if you could just share how is the competitive intensity in our own state as well as our other key states?
Yeah, competition is definitely increasing, and it will increase, and we factored that in terms of competition. So here, our confidence level is based on the demand. There's increasing demand not only in the metros, even in the district towns, or even beyond the district towns like Tier 2s and Tier 3s, where people are shifting to use of packed curd than making curd at home. The hassles involved in making curd, time required, and lack of consistency in making home curd, etc., are driving the sale. And we have so much of uncovered territories within our markets. So we have been expanding in terms of capacities in the back end, and it requires front-end capacities also for storing the chillers, etc. And the distribution capability, this being a fresh product, it cannot be transported long distance, and the short shelf life and the texture will get disturbed if the transportation distances are too long. So there are limitations under which we are growing. If we can break these limitations by expanding more capacities and penetrating more markets, we are very confident of growing, having stabilized our quality and reputation on quality in spite of the competition. And we do acknowledge competition is intensifying, increasing from the existing brands and new brands too.
Okay. And so just lastly on the bookkeeping question, if we could share the procurement price for the full year, the milk procurement price for this year versus last year, and also for first half and second half average.
50. Here, overall we have. Yeah, it is reflected in our investor update presentation, page number 10. I think this was uploaded today. Milk cost for Qtr4 is 33.37 rupees average, and full year it is 33.89.
Okay, sure.
It is an average of cow milk and buffalo milk, so you won't be able to decipher how this rate has come.
Right. Okay.
This is a mix of cow, buffalo is there, so average rate comes like this.
So for us, the ratio of cow and buffalo is how much roughly?
It keeps changing the season to season because the cow milk share will be close to 50-55% on an average. Though in certain seasons it will go up, on certain seasons it comes down.
Okay, fair enough, sir. Thank you and all the best.
Thank you very much.
Thank you. I now hand the conference over to Shailesh Kumar from Sunidhi Securities and Finance.
Yeah, before handing over the call, I have a couple of questions. First thing is 163 crore capex in the dairy space that we have taken this year. What kind of capacities we have created?
It is all not everything is on capacities. This also includes the cost of acquisition of dairy life business.
Okay.
Okay, that's the first thing clarified. So entire thing is not on capacities.
Mm-hmm.
And additional capacities added. Okay, it's close to 5 lakh liters capacity is coming.
In milk?
Yeah, milk only.
So it is milk packaging?
It includes, some of it goes to procurement of milk.
Okay.
Say 1 lakh liters of milk procurement capacity has been added as part of this.
Mm-hmm.
And that 1 lakh gets repeated elsewhere also in the operation. So operations includes processing, packing, homogenization, all that in different stages is coming to 5 lakh liters of milk, and part of this milk goes to curd also. So it is inseparable,
Okay.
Milk comes to a plant. And let's say there I have added 1 lakh liters. Part of the milk goes for fresh milk sale, part of the milk goes for buttermilk, curd, flavored milk, etc. So it is a kind of overall mix. The capacity of the company has gone up by 5 lakh liters.
Okay, and sir, if I may ask, what is the specific capacity of curd?
Specific capacity of curd is close to 5 lakh liters a day.
Okay, 5 lakh liter per day. Just one last question. This investment of around 1,000 crore in our balance sheet. So if we can have the breakup, financial assets.
This is only one month that shares in future.
Okay, it's that only?
Yeah, that's it.
Oh, I think that suffices. Would you like to have some closing remarks?
I thank you very much for the continued interest shown in Heritage Foods, and happy to share more individual discussions as part of our interactions during the year. I'll be meeting a few of them in different conferences and one-to-ones, etc. More and more information we are willing to share, and detailed presentation is also on the website. Thank you once again.